Hi, this is John Vance with Vance Wealth. I am going to cover a topic today on short selling. So we've seen a lot in the media about some of these stocks like GameStop and AMC in the media lately. So I just want to spend a little bit of time to help you learn about short selling and I guess really areas that I would be careful with. So short selling is definitely not for everyone. It's, in my opinion, can be quite speculative. So I want to just walk through a scenario so that you understand what that means. So when you're an investor, there's basically two ways to invest. You can go long a stock or short a stock, or long the stock market or short the stock market. And when you're long, as an investor, when the markets go up, then that's when you make a profit. So if it goes up, then you earn a profit. If it goes down, that's when you have a loss. On a short selling, it's the opposite. So when a company goes up, you lose money if you're in a short position. And if the market goes down and you're in a short position, you make money. So the reason why people will do short selling, there's many reasons for it. One of them is to potentially hedge a position. So let's say you own a company that has gone up a lot in value and you don't really want to sell it and pay tax. You mainly want to basically avoid a big downturn in the market. Then you can create a short position to hedge your position. So that's kind of the main way it's utilized. It's really, that's from more of a protection perspective. But then the other way, and this is what we're seeing here recently, is more about using shorts for what I would call more speculation, making a big bet on a company or an index. And so primarily what we're seeing right now is what's happening with an individual company. And so I want to talk a little bit about some of the dangers with shorting stock. So if we look at a typical investment, and let's just say we're going to invest in ABC Corporation. Obviously this is a fictional company, but ABC Corporation, and let's just say this company is trading at $10 per share. Okay, so when you are long, basically, and you buy something at $10 a share, the worst case scenario is that it goes to zero and that you have a loss of 100%, right? So that's what your downside is. You know that if you're an investor from a long perspective, that your worst case is you lose 100% of your money. Well, and that's significant, that's enough. So you lose 100% of your money. And then the upside is essentially unlimited. Now, in practicality, trees don't grow to the sky, things can't go up forever. However, it's essentially unlimited because the stock can go from 10 to 20 to 30 to 40 to 50, can continue to go up. So your gains can be far in excess of 100%. So that's one of the reasons why we want to be long-term investors and be long stocks, is because your downside is 100, your upside can be multiples of that, and you can really experience massive amounts of growth. So when we take the flip side of this and say, what about short? If I'm going to short a stock, and so if we use the $10 per share as we use on the long scenario, if the stock goes to zero and you are short, you make 100%. So one of the reasons why I don't like shorts is that your maximum is capped at 100%. That's your max. Because if you pick the right company to short and it goes to zero, then you make the maximum amount of profit, which would be 100%. But here is where short selling gets really dangerous, and this is why it's been in the headline, because it's created massive amounts of losses for big investors. If the stock goes from 10 to 20, then you lose 100%. If instead of going just from 10 to 20, it goes from 10 to 30, then that's a 200% loss. If let's even fast forward and let's say it goes to 60, that is a 500% loss. So you can see when you're in a short position, the magnitude of the position going against you can be unlimited, and so that's what makes this quite dangerous. Now, hopefully that gives you a little bit of an understanding of shorting an individual stock. You can also short a broad stock market, which kind of gives you the same idea. It just won't be quite as volatile. And again, the reason why people will do it in a prudent, responsible way is for hedging their positions. But what we've been seeing lately, in my opinion, has been due to heavy speculation, kind of a greed mentality, trying to make a quick buck. And there's been a lot of excitement because it's been all over the media, and it's created some big winners on one side and some big losers on the other. So there's the update on short selling. One of the things, here at Vance Wealth, we really pride ourselves on doing, comprehensive financial planning, financial education for our investors. Hopefully you found this to be valuable. If you're in the need for any ongoing consultation, would like us to review your portfolio, update your financial plan, feel free to reach out to us. Our number is 661-775-0950, or you can check us out on the web at vancewealth.com. Thank you very much.